watching India Today.
And let's get you some news coming in at this point in time. There's high drama outside the TVK office. Discontent. TVK Thuthukudi cadres attempt to stop Vijay's car. Party functionary Ajita and supporters attempt to stop Vijay's car over party position issue is what we're learning at this point in time. These are details that we have with us. A drama that is being seen. Netas are upset over party positions that have been allotted. We have some details of the manner in which there was high drama that was seen outside the TVK office. Take a look at these pictures coming in. I'm going to go straight across to Pramod Madhav, getting in more details on that story. Pramod, what happened? Tell us more.
It's a very interesting that is happening over there, because on one side, Vijay's party, TVK, wants to eradicate such kind of issues, be it internal party or external party matters. However, what's happening over there is that Vijay was present at the Tamil Nadu party headquarters at Paniyur in ECR, where he was actually conducting meetings about, organizing and also appointing district secretaries and such. We've come to know that one of the women called as Ajita Agman, that is the woman who was trying to stop Vijay's vehicle. She has been prominent in Thuthukudi, trying to do party work, but she has come to know that her name was not on the list. That has forced her to act in such manner. Vijay's vehicle was halted for some time, but however, he had gone inside the place, and right now they are also holding a discussion, and the team is still waiting there, hoping for some kind of change in the name that has been announced, Neha.
That's right. These are images coming in at this point in time of the TVK party, which is headed to elections in the state of Tamil Nadu. It's a brand new party and brand new ambitions as well. Party positions have been allocated. There's been fair amount of discontent. Pramod continues to be with us. Pramod, take us to what exactly are the decisions that have been taken at this point in time that has led to so much disgruntlement in that sense.
Yeah, the thing is that Ajita claims that she has been doing multiple work in that particular area, but however, there is a kind of more programs over there by which her name was not part of it. That's what her supporters claim, and that's what has led to such kind of promotion over there. Something that was not expected, but something has in such manner has occurred there over there, Sneha.
The images on your screens of the chaos and confusion that ensued at the Chennai party office of the TVK. Vijay's car was essentially blocked. It was drama that was seen in Chennai. At this point in time, you see workers of the party extremely upset. TVK office in Chennai, where this drama was seen to stop Vijay's car. Take a look at these pictures once again. Pramod continues to be with us. Pramod, tell us about the current situation as we speak, given that we see police also that have gathered there at that point in time. How is the situation right now as we speak? Pramod. Okay, we will continue to get you more on that story, but at this point in time, we're telling you about how party workers have been upset over certain party positions that were allocated. This is the TVK, and TVK Neta and boss Vijay's car was stopped by members of his own party at this point in time. More news coming in. Shifting focus to Delhi, where the governor has slammed Arvind Kejriwal's smog hypocrisy. LG recalls chat with then Chief Minister Kejriwal. Kejriwal trivialized pollution. Ex-Chief Minister called it a fleeting issue. The Chief Minister had then said, everyone just forgets. That's the LG's big statement. Maria is with us for the very latest. Maria, the tussle between the LG and the former Chief Minister really refuses to die down. Even with Arvind Kejriwal not at the helm of affairs, a statement has been made by the Delhi LG talking about the fact that he was non-serious.
Yes, that's right. In fact, the Delhi Lieutenant Governor, V.K. Saxena, has written to Adani Ports, the former Chief Minister, and has slammed him for his doublespeak on the issue of air pollution. In fact, Mr. Saxena has called out what he says has been gross indifference of the former chief minister. And then he said that there have been series of statements that have been made by him that there was inaction on the part of Arvind Kejriwal government, that is the Aam Aadmi Party government, in the last 11 years. And that is the prime reason why national capital continues to choke. And that Mr. Kejriwal's government did, what they did was blame game, according to Mr. Saxena, against the Punjab government and the government of India, and that they did not really take any step which was needed to curb dust generation. That is majorly responsible for air pollution in Delhi. But this aside, the major question is that he should be asking questions also to the present chief minister who has been in office, and it is the present government which has much to explain, not what happened previously. And that's where you're seeing the former Lieutenant Governor, in fact, the present Lieutenant Governor of Delhi, trading guns, actually going right at Arvind Kejriwal, saying that he did nothing, while this government, because it has just come to office, is actually clearing up the mess of the previous regime.
All right, I'm going to leave it there for the moment, Maria, getting in those details and putting that into perspective. More news coming in at this point in time. Samajwadi Party MP schools Rahul on Berlin remarks. The MP in question says, you're an Indian when you go abroad. You should speak for India on foreign soil. This is the advice that is being given by an MP to Rahul Gandhi. Remember, the leader of the opposition in Lok Sabha attacked the government and the Prime Minister while in Berlin. Gandhi had said that there was vote chori in the state of Maharashtra. Also that India's elections aren't fair. Listen in.
व्यक्तिगत रूप से मेरा मानना है कि सत्ता पक्ष हो या विपक्ष, राष्ट्र सर्वोपरि की भावना से जब भी बाहर जाएं संयमित रहें। देश सबसे बड़ा है, देश के बारे में सकारात्मक नहीं बोल सकते तो नकारात्मक नहीं बोलना चाहिए।
Right, I'm now going to go straight across to my colleague Sakshi Batra for the very latest as far as the markets are concerned. Over to you, Sakshi.
Thanks a lot, Sneha. Hello and welcome. You're watching the Business Today show, the 3 p.m. show where we get you all the market closing action on the Lal Street. But first up, let's take a look at what's hot in the corporate and the financial world. Markets trade flat ahead of the year end with the Sensex hovering around 85,600 mark while the Nifty is nearing 26,200. Remember, today is the Nifty contracts expiry after 2 sessions of gains. There's some selling pressure on the IT sector while financial services stocks see buying interest. The bullion run continues as precious metals, gold and silver soar to record high levels even today as global markets react to US rate cut hopes and safe haven demand. MCX gold now trades at a peak of 1.38 lakh rupees per 10 grams, up 1,500 rupees, whereas silver has also surged 3,000 rupees overnight, trading now at 2.16 lakh rupees per kilogram. With the demerger over, Tata Motors now plans a major push in the passenger electric vehicles market. Blockbuster Sierra now to be available in the EV avatar next year. Micro SUV Punch also to be refreshed up in 2026. Stock is up 2% as company says it will have 5 new electric models in the next 4 years. And it's for the first time in several years that auto companies will not be increasing prices in January. The benefits of the recent cuts in the GST rates will continue for the Aam Aadmi, with only super luxury car makers announcing price hikes in the new year. Companies like Maruti Suzuki, Tata Motors, Mahindra & Mahindra are not going to be burdening the customers as of now. India's informal economy will be a part of the GDP calculation starting February. Government will overhaul the methodology for the major economic indicators. Newer trends like e-commerce and digital economy will also get included in the calculations now. Government emphasizes there is nothing wrong with the 8.2% GDP figure for July to September. Straight away looking at how the markets are trading in the last half an hour of trade. Well, the Nifty is at 26,177. Still about, 7 to 8 sectors are holding up into the green. Leading the gains are metals, FMCG. Even the small cap stocks that picked up some momentum over the last couple of sessions have moved up further. Financial services, oil and gas and auto stocks are also doing well. On the Nifty, you have names like Coal India up in about 3.5%. Shriram Finance continues with its winning run for the fourth session in a row. You can also look at UltraTech Cement, Tata Motors, Tata Steel as among those stocks that are up by nearly 1% and a little bit more. Let me now go across to our guest of the day, Abhishek Basu Malik, the co-founder and fund manager of Sri Rama Managers PMS, is joining in on the program. Warm welcome to you, Abhishek ji. Good to have you with us. Well, first up, a quick view on the markets. We are in the last 7 sessions as far as the 2025 year is concerned. Help me understand, what's your take? Are we done and dusted with all the volatilities, the uncertainties that the markets went with throughout the course of this year? Are we going to be looking at a better year going forward? Are you on mute by any chance, Abhishek? I couldn't hear you at all.
Yeah, sorry.
Okay.
So, good afternoon to you and all the viewers. We're heading into a festive season and a new year.
Yes.
But I don't think that we will, the volatility is going to go away anytime soon. There might be some initial, euphoria of the year end and the new year beginning. But I still think that the range that we are stuck in is going to be around for some time, because like we discussed earlier this week, we are still being, we are still in that regime where corporate results are not that great, and macro wise, although we are good, but the main overhang is the US tariff deal, which there's been no concrete steps that has been seen so far. So till that time we see the US tariff deal happen, I think sentimentally the market is not going to break out from here.
Okay, but given the scenario as far as the progressive talks are concerned on the US-India trade deal, do you still feel that there are some sectors that are just waiting for that deal to happen and then the outperformance could come in? What would those pockets be?
The obvious ones would be sectors which export heavily to the US. So textiles would definitely be one. Aquaculture, fisheries would be another. These are sectors where exports to the US are significant. Auto ancillaries to an extent. IT, although it's not been impacted, but the sentiment overhang would be sort of removed to an extent, I would say.
Okay, but there's one asset class that has in fact benefited from all these uncertainties around the trade deal, the geopolitical tensions, and everything that loomed large as a negative for D Street, and that's the precious metals. There's no stopping the Santa rally in gold and silver even now. Both have surged to record high levels yet again. And to really understand what are the expectations going even forward from here in the new calendar year after humongous returns on both gold and silver, 77% rally on the MCX on gold, a 141% rally in silver. What is the expectation going forward? I earlier spoke to Navneet Damani, the Senior Group Vice President and Head of Research at Motilal Oswal Financial Services, on how much further this rally could go. Let's listen into what he had to say. difficult to assess which levels should they be at, over the next 5 years odd or so. But for all those investors who are looking to buy gold and silver for their absolute long term, what are you advising them? First of all, what should be their strategy on gold and silver for the absolute long term? Should they be doing SIPs in gold and silver ETFs? Is that a better idea? Should they be holding more gold and silver physically at this point in time, looking at what could happen over the next 20 odd years? And even then we could find the current levels, which are extremely expensive right now, at a much cheaper level, because inflation will add up, things will change, economies will evolve. So how are you advising investors looking at gold and silver opportunities for the next 5-10 years?
Well, at least a 10 to 15% of your investment should be in gold and silver. That we maintain time and again, and that is something that will continue for the next 10, 20, 30 years as well. So diversification comes to your savior at this point in time, where equities have given kind of no returns in 2025, and gold and silver has come to the rescue and balanced your portfolio with an average 7-8% kind of a CAGR, if I see, for the last 2-3 years. Overall, I think it's a balanced approach to have gold and silver as part of your portfolio. It could be in any form, SIP in gold and silver. Because why I say SIP, markets have moved very fast, very sharply. So lump sum at this point is not advisable. Maybe if you get a correction, if you get a cool off, if you get a time-wise correction also, SIP could be the way where you could invest in gold and silver over the next 5-7 years. To top it up, if you are comfortable holding it in physical format, that's also one thing. And jewelry is something which we don't recommend, because unless you want to wear it, you want to flaunt it, it's a different story. But otherwise, jewelry typically takes about 12 to 15% away in terms of making charges and 3% GST caveat. So in short, if you buy jewelry, you are down about 15% immediately ever since you purchased it. So that's the last resort. Unless you want to wear it, it's different. But otherwise, holding physical bars and coins or investing in systematic format through SIP is the method where you should invest in gold and silver for the next 5 years.
The outlook on gold and silver prices for 2026, Navneet also did mention that he does not rule out 260,000 on silver as far as 2026 is concerned on a conservative level. He also mentioned that 1.5 lakh rupees per 10 grams on gold could also be seen, although there could be some correction in the near term as well. Let me go across to Abhishek. And I think the one big question that a lot of our viewers would also want to understand from you, Abhishek, is that after a stupendous run-up, should one continue to believe on gold and silver, bet big there, be aggressive there, or should one look at the markets per se, maybe look at an index fund, look at directly investing in mutual funds at this point in time? Will there be that the markets come back and perform vis-a-vis gold and silver in 2026?
Very difficult, call to take, because gold is going up this time, basically because one, there is a lot of geopolitical tension, especially surrounding the US and the reserve currency, which is the dollar. So as much as dollar, as much as gold is going up, I think it's got a lot to do with the global weakness of dollar. So if you look at the, movement of dollar, it's pretty much weakened against every other currency. Rupee is actually one of the exceptions. So basically gold is going up simply because the central banks are buying, and it's more as holding of a currency. So very difficult to call whether gold is topping out now, but I would be very circumspect regarding gold and silver, because the run-up has been too sharp, too fast, and we are seeing parabolic kind of moves. We are seeing, signs of froth, because whenever your WhatsApp messages and your social media is full of a surefire thing, it usually means that, the story is probably coming to an end, or at least story is coming to a pause, sometime.
Okay. In fact, viewers, you can actually watch the entire interview with Navneet Damani on Business Today on our YouTube, on our social media platforms, Twitter, Facebook, Instagram as well. Let's move on to now finding out what's happening in the auto sector. In case you're planning to buy a new car in the new year, well, you may want to Also reconsider your timing as prices are expected to surge starting 2026. Automakers are already signaling some price hikes, but at the same time, a majority of them have not yet announced that they are going to be hiking the prices as well. So there could be some good news continuing this time around as a one-off situation. Let me go across to my colleague Chetan Bhutani to find out what's exactly happening as far as the auto space is concerned. Chetan, now starting January 1st, as the norm says, every time the discounted period gets over from October to December, usually the car companies go on to hiking their prices because they launch newer models at a much higher price, and that's where the demand is. But this time around, situations were different. September, that is in the second half of calendar year 2025, is when the government came out with these robust GST rate cuts that slashed down the prices of a lot of two-wheelers, car companies, smaller cars, giving a lot of relief to the middle class and the lower middle class as well. Now, give us an understanding on as to, are the companies really looking forward to raise the prices in January, or is it going to be a good relief even in the new year for the customers out there?
Well, for Sakshi, for consumers, it will be a mixed bag starting 2026 if they are looking to buy a car. Well, Tata Motors, in fact, today, only a few hours before, Shailesh Chandra addressing the media also mentioned that the price hike is under review. But in our interview to Business Today, he mentioned very categorically that they will have to undertake a price hike. So Tata Motors will definitely be taking a price hike. MG Motors India will also be taking a price hike of around 2 to 3 odd percent. Okay. However, good relief is coming in from Mahindra and Maruti, which command about 54 to 55% odd market share because of their SUVs and rolling new stocks out, and of course with new launches coming up. Both of these companies have stated that they won't be hiking prices. In fact, Mahindra has stated that they don't want to sabotage the relief measures announced by the government with the GST cut. Maruti Suzuki is however tight-lipped, but we know from sources that they will not be looking at hiking prices immediately. They might look at in few later months like February or March or April, in such months to go, because they want the consumers to enjoy the benefits completely. On the luxury front, we see that Mercedes-Benz would be announcing a 2% price hike. Rest luxury players are yet to announce a statement, but yes, closer to the new year, we would be expecting luxury players and few more companies to be announcing a price hike as well.
Okay, all right. Viewers, in case you're looking to buy a car from Tata Motors, MG Motors or Mercedes, then probably it's better to buy those cars before December ends. But rest of the companies may extend that benefit for you, at least in January. We are still going to be waiting to understand from them as to whether a price hike for the new year is actually happening from their side or not. Thank you so much, Chetan, for getting us all those details there. Let me go across to Abhishek. Abhishek, auto space for you. How are you looking at the stories developing there? We did see the stock prices perform really well, amidst all that GST rollout that we had seen in late September, all the way up to October, November, the festive period as well. How are you looking at these companies in case they defer the price hikes? Will there be some loss on the margins?
I don't think so. I mean, in fact, just taking a slightly, higher level view, I was just looking at the composition of the Nifty India consumption index and how it has changed, say, over the last couple of years. And what we see is that FMCG actually has come down the most, and the two which has gone up is consumer services and automobiles, right? So basically the consumption, whenever we talk about India as a big consumption market, what has actually changed is that people are consuming more of, consumer durables, which is ACs, refrigerators, mobile phones, etc., and automobiles. So bigger cars, larger, SUVs, EVs, motorbikes. So that is where people are consuming more and more. So if the companies are holding on to the price, they might actually be playing for higher volumes.
Okay, got that. Any favorites as far as the auto space is concerned in 2026? What are you going to be looking at buying?
I don't know what I'll be looking at buying, but if I look at the four-wheeler space, I think Maruti actually looks quite interesting because they are lining up a lot of new launches in the four-wheeler space. And of course, there is also a shift happening to in the commercial vehicles. So commercial vehicles wasn't doing all that well, but now they are picking up if I look at the numbers. So that's also something which is very interesting.
Fair point. Let's actually broaden our understanding of what's really happening on the broader economy front, viewers. Now, the government is now set to overhaul the methodology when it comes to measuring the economic indicators. Beginning February of 2026, the GDP growth, inflation, as well as the index of industrial production will be based on a new series of macroeconomic data, addressing some of the concerns that have been raised already by global bodies like the IMF and even the World Bank. The biggest change will be the use of double deflation, which uses different price indices for input and output values against the current single deflation method. Back series data for past 3 financial years will also be released, and real-time data for GST will also be available for viewers to note. Importantly, the new system will also be tracking countries' informal economy and e-commerce data as well. Let's first listen into what Chief Economic Advisor Anant Nageshwaran had to say on the same.
In general, we don't hear too many murmurs when GDP data disappoint on the downside. Particularly, I remember being in Singapore and writing my Mint column in 2020-21, first quarter, when the annual GDP contraction was estimated as somewhere around 25% year on year. For the full year, we had a 5.5+% contraction. So when the Indian statistical authorities reported a 25% contraction, nobody got up to question the methodology, the reliability of the numbers, the single deflator being used, etc. All of them were kosher, because the GDP data met their prayers or even exceeded their prayers, because they want the GDP data to disappoint. And when the disappointment was met, there was no complaint about methodology. It is only when the GDP growth numbers surprise on the upside, we hear all these concerns being raised.
Let me go across to my colleague Karishma Sudani to understand some more details on the same as well. Karishma, first up, a new way of calculating GDP, adding even the informal economy. That's going to be a completely new overhaul of how the GDP data has been looked at. Of course, like Mr. Nageshwaran also said, that time and again there have been a lot of murmurs on as to finding out whether the GDP data truly reflects the clear picture as far as Indian economy is concerned. With the new calculations, how are we likely to see the GDP data going forward from here? What are the reasons that the government is looking at this newer form, and will this make a marked difference there?
Well, this is something that's not happening overnight, to be honest. It's been something that has been under works for 2.5 years now. But of course, early this month when IMF downgraded us to grade C because of the way our GDP is calculated, it did raise a lot of questions. And Mosby, along with Chief Economic Advisor, throughout the GDP releases have spoken of the fact that they are looking to revise the base year revisions, because current dependence on base year is only from data pertaining to before 2014, which clearly does not make sense, because India has also made a lot of progress in the next 10 years. Now, while Sakshi already mentioned that double deflation across all sectors is going to be one of the key changes that the base year revision is going to see, especially on the fact that how double deflation will be included across all the sectors, and it will help in assessing the real term value, which in turn will contribute to having a more precise output. Also, the fact that past years data will also be then recalculated, and there will be back-end data available for the past 3 to 4 years. It will help them to have a decent comparison, which means from Feb 27, when the advance estimates will be released, they will have a more precise understanding in comparison to what we've been currently following.
Absolutely. This is going to be of extreme importance there in February. Is it going to be released along with the budget, or is there no clarity yet as to when in February?
No. So as you know, advance estimates are released end of February every year. So it's going to be around Feb 26 or Feb 27. This is going to be well after budget, and the second advance estimates will give a detailed idea of the growth numbers.
Fair point. Karishma, thanks a lot for getting us all of those details for all our viewers on India Today. Abhishek, let me come across to you as well on this very important aspect, a new GDP series, a new methodology that will now calculate rate, informal economy as well, take the digital footprint and data from that aspect, which has become an integral part of a lot of tier 1, tier 2, tier 3 spends as we continue to do. Of course, on the double deflation that Karishma was mentioning, a new way of looking at inflation data and even the IIP as well. How important and critical is it going to be? And will this make an extreme amount of change or impact with the way our economy is seen?
To be very honest, I haven't actually, studied in detail about the new GDP and how it's going to be calculated. Because always the devil is going to be in the details. Collecting information about the informal sectors is not easy, and how it's going to be done, what kind of approximations are going to be taken is ultimately what is going to be important. So unless I think the first, data comes out and people who are much more conversant with how these things ought to be done or, are being done, they, come out with some kind of a commentary. It's going to be difficult for people like us who are not, on the ground, hands-on economists to figure out what exactly is the case. The intent obviously seems to be good to be able to capture the informal economy, but the problem is how it's going to be done.
Absolutely. Let me now quickly look at wrapping the markets, and of course, Abhishek, we'll come back to you as far as some of the questions are concerned from our viewers as well. Let me just quickly look at how the Nifty is shutting shop. Now we've slipped a tad lower below the flat line on the show, viewers. You can see 26,160 now. So after that considerable amount of move on the higher side yesterday, we are probably and holding up into the green zone for large part of the day. Today we are seeing some profit taking towards the end of the session. 26,165 as far as the Nifty is concerned, just flat with a negative bias. Some of the sectors that have extended some losses are IT. After yesterday's substantial move, it's given up about half of the gains it clocked in yesterday, almost 1% lower now. PSU banks down by 0.4%. Pharma, real estate also among the top laggards among the sectors. This is despite the fact that India VIX is also lower by almost 3% viewers. So the pressure continues on real estate, private banks, on auto space, infrastructure, oil and gas. But what's still holding up? Media stocks, FMCG, metals, financial services. These are all the sectors that are still holding up into some minor gains. On the Nifty, as far as the gainers are concerned, you have Coal India at the top spot, 3.7% higher. Shriram Finance at 958, it's up by about 2.5%. You have ITC from the FMCG space that's also pulled up at 408 odd levels, 1.5% higher. UltraTech Cement, Tata Motors, these are all the other stocks that have been holding on strong. On the lower end, Infosys, Adani Ports, you also have Bharti Airtel, Sun Pharma and Tech Mahindra as some of the stocks that have also declined in trade, anywhere between 0.5% to 1.5% lower in trade as far as these stocks are concerned. When we talk about the biggest gainers on the Nifty 500 basket, well, you did have some names like Prism Johnson, you had Steel Exchange in India, TCI Finance, you had names like Jupiter Wagons continuing to move up higher, Purvankara, some of these broader market stocks that continue to pull up. Abhishek, coming back to you. Let me actually try and understand on the most favorite segments for retail investors, defense and railways, both started to pull up yet again in yesterday's trade. Some of the railway related stocks continue to move up even in today's trade as well. Is it the pre-budget rally that's already taking some shape? Is it just knee-jerk reaction because the railways talked about some hike in fee? How are you looking at the railway space that did not have any performance to make and disappointed investors holding for the long term in 2025? Will they come back now?
Yeah, I think so. I mean, this seems like a pre-budget rally, but I think overall, if I look at the sectors, I think defense, railways, capital goods, manufacturing, these are the sectors where the government is actually focused a lot, and they want that's where the spending is going.
Sure.
So definitely at some point in time it should start performing, and last couple of years it's not performed, so that makes it all the more the time for it to again start.
Okay, we have a question for you, Abhishek from Navneet from Delhi, one of our viewers, who says, what are the prospects for small finance listed stocks? Are there any newer opportunities in this space, small finance bank stocks?
I think the overall banking, space, NBFCs, small finance banks, all of them are in a good place. Individually, I think stock-wise, I don't cover a lot of them, to be honest. So can't give you a more detailed answer. But overall, I think the banking space, NBFCs, small finance banks look interesting.
Okay, Smita from Bhopal says, which are the sectors that are expected to receive a boost ahead of the budget? Is there any potential for any new age stocks also to start performing?
I think we will again go back to the defense, railways, infrastructure, agriculture. That's the focus. That's always been for the government for many years. I think that's not going to change. So even new age businesses which are aligned to these sectors could do well.
Okay, fair point, Abhishek. We're going to be thanking you right there. Thank you so much for being with us. And of course, festive greetings to you right ahead of Christmas and the New Year. Of course, we'll be catching up with you even before the New Year sets in. But good time to you. With that, viewers, it's a wrap on the Business Today show. And in case you too have any questions about your investments in your mutual funds, SIPs, stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens. Of course, don't forget to catch the morning market opening action at 9 a.m. tomorrow morning on India Today with Abha Bakaya.